Hey everybody, welcome back to the channel. Today I'm going to go over the Friday AM Silver Bullet on June 23rd, Friday. When you come to the chart, we see that sell side liquidity has been taken here. This is at 9:30, the open. Kind of chopping around, but we're still bullish because it hasn't taken out this low yet. It's taking out some highs. It's coming in, reversing, coming up, just chopping around. So just got to be careful with this. It's kind of a choppy session. It's dark gray. Now we just started at 10 a.m. right there. Okay, so this took out the highs right here, came down, come back. Let's see what happens. Okay, so there is a fair value gap right here. Let's mark that fair value gap. See, if the price comes down, we'll be aiming for at least this 8:30 open, but you can target up here. So if it comes back down, we'll take a long. Another fair value gap right there. Alright, so let's buy two there. Okay. Let's put our position on here. So we would have bought right here at the start of the fair value gap, but we actually had to get in right here. A little bit better entry because of the stop on Tradingview, how it works. So where would be my partial? My partial would be right in, well, let's see, 60%, but right about here would be my partial. Let's mark that off. Take my partial somewhere in here. Would be my, somewhere right in there would be where I'd want. Let's move this over here. Let's be right where I'd want to take my partials, right in there. Let's see how this plays out. Let's see, and it is 1 to 2, so that's good. It's close. It's not partial. Going back down. See, I hate it when it comes all the way up here. I should have taken a partial right in there. But because of the way this works, it would have been down here. So that's, I didn't have a candle close above right up here. In live trading, that would have been where my partial would have been. I would have taken a partial right in there. And so I'd been close to break even right here. But because of the way this is, I can't. So let's move this to 1. Just so when we do take a partial, I'm not giving away the whole position. Close. Oh, no. Darn it. Okay. I need to close around this area. A candle close so I can exit a position here. Alright, that's close enough. I'm gonna exit right there. So I'm gonna sell one position. Sell one position there. Stop would be at break even. So it would be break even. And we're flattening. We would have been broke even right there. Would hit our break even right there. Let's move this to this right here. It's very choppy. See, it's going up, down. It's taking out lows, taking out short, going up. Now it's just very choppy. Not ideal. I did respect that fair value gap right there again. So you could have entered there, or like for us, it took us out there, but could have been another entry for somebody else. I'm not re-entering because I already took my partial. I already got paid, so I'm not. And I'm just not liking this price action. It's just very choppy. That's where we would have taken our full profit, having not moved our stop to break even. I'd still move my stop to break even. It's part of my rules, so I do that anyway. So buy side liquidity has been taken right here, which actually matches right here too. So it's interesting. So buy side liquidity has been taken. So now we would need this to be, right now we need this to be broken to go short. A reversal, we need this to be taken. So let's see what happens here. Well, let's see if we take this high again. Okay, so right now, this would be a market structure shift for this one, but this could be like a mitigation block, and this is like a failure swing here. So the candle bodies are the same, so I'd consider this as a market structure shift as well because of candle bodies. I ignore the wicks, but candle bodies, I would consider that. This would be a short-term low or a market structure shift, kind of based on however you want to call it. If you include wicks or not. But the bodies are the same, so for me, if it breaks this with displacement, I'd also consider that as well. It ends right there. So I need something below that to be a market structure shift. Okay, so you get a volume imbalance here. Mark this out here. Volume imbalance there, and you get the market structure shift right there, so you're good there. We have a fair value gap here. What else do we see? Okay, so let's put this candle by candle. You have a mitigation block here. Last down candle, it went up, failed to swing, closed below it, so when it comes back up into it, that'd be a mitigation block to go down. So if it comes back up into this fair value gap or mitigation block and anything past this line right here, I'm going short. Okay, so I have to sell 2 there, but granted it's right there. It would have been up here. So I would have gone short right there. My target would have been 7.5 handles. You'd be aiming for this swing low here. You're drawing liquidity right there. So there's handles there. It's a 1 to 3 risk trade. So that'd be good. Let's see how it plays out. I'd be taking partials right here at this low here. So partials taken there. So let's move our... Alright, so let's see how it happens here. I didn't close below it, so I gotta have a close below that. Okay, so I'm gonna buy one there. And then now this is a risk-free trade, right? I'm not, I'm at break even there. So we'll see how this plays out. And then we got out, so we have to get out of our... See, I got to get out all the way up there. Well, we got out there, but technically it went below our line, so we would have got out there. What else do we see here? We have a huge fair value gap right here. If we took our fib and drew it from the high here to the low here, that's in a premium to go short. But where we go short for here, there's also a draw on liquidity down here, right here. So let's see. We could take that trade. It comes back up there. Let's see if I get another closure above. Right there. Let's Let's sell to short position. Go here in the middle of the, when it's a big fair value gap, I like to take it in the middle. So I'd put right there would be 2.5, and we'd go down here to 3, 1 to 3, risk 1 to 3 again, in the middle of this 2 range here. Let's see what happens. My partial here, I'm going to copy this, show you where my where I take my, wait a minute, make my partial. I take my partial, that's about 60%. Let's take it about there. That's where I want to take a partial at. So I'll sell, I will reduce it by 1 there. Closer. Now we're after our 11 o'clock silver bullet hour, so we know that we're going to get, you know, this kind of price action. Okay, let's close it. Let's buy 1 there. It would have hit us if we had a limit order. It would have taken us out. So that's just is what it is. And let's just see what we get here. See if we get a closing out or not. Oh, that sucks. It closed all the way up here. But there are your 3 trades, 2 of them for silver bullet hour. We got a partial taken here and then break even. If we didn't move our stop to break even, we would have made full profit. So that's up to you, but my rules, I move it at 60%. I take partials and I move it to stop to break even. That's how I trade. If you want to trade differently, that's your call, that's your decision. Then price came up, took buy side liquidity. And they had a market structure shift, leaving behind a fair value gap and a mitigation block and a volume imbalance. Price traded back up. We got short, took a short there. We took partials after it took out these swing low right here, and then we got out at our full take profit down here. We noticed it left behind a fair value gap that was still in a premium from when we pulled our fib. Even if we pulled our fib from here, where we got in was in a premium, so that's why it was above 50% of the fair value gap. We waited for it to come in. We took our trade. We went short, and we took a partial here, and we took full TP down here. Okay. It was a 1 to 3 trade, a 1 to 3 trade, and this one I think was a. So there are your 3 trades during the AM Silver Bullet session on Friday, June 23rd.